So definitely worthwhile taking a look at Bitcoin and pushing out another update. Because I'm spot long, so 50% exposed to the market. I'm happy chilling cash, um, with the other 50% sitting there. I'm ready to deploy as and when I see fit. I do think that we are in the early stages of reversal or bottoming structure. But something like this can take months, right, to complete, right? And we can always take a look back at how the summer price action was like back in 2021, and I think we are closely following a similar situation as to back here. All right, and we're going to go through this today and try not to keep the video too long, but it's definitely worthwhile pushing out an update. So, like always, our interest is in the breakaway gap, which we have, okay, which we've pretty much filled now, right? So this is pretty much filled. As you can see, we have actually had the bounce above in the close, which is here, right? And this is our weekly breakaway gap, okay? And as I've mentioned before, breakaway gaps, they are a breakout of consolidation. So a period of consolidation, as you can see, over the many months last summer. So breakout of consolidation, you then have the displacement move higher, which we've got here. You form a bullish fair value gap. In other words, in this case, an alternative being a breakaway gap, and then price slowly trades back to it. All right, and think of it a bit like it's a bit like support and resistance in a way. Price trades back into it, and then we should see continuation higher, right? If we lose this, then as you can imagine, we're likely going to enter back into this range that we had for many months last summer, right? We're at greater risk of obviously downside. Okay, so now looking at this structure at this moment, we have the reason why I have Bitcoin in a buy program is because we have swept, right, considerable sell side liquidity. And I'm going to go into a little bit more detail at the moment. Okay, so, right, an internal range liquidity, right, as you can see there. And we have the sweep here, okay, which we had swept prior. So when you think our last buy program was actually on this sweep back in March, this liquidity raid, sell side liquidity raid, which we had the bounce, but then we had reversed that and ultimately targeted this low here, right, on this down close candle. So we did have this raid here. So that was the original buy program. This is looking a lot better. This is giving me a lot more confidence to be spot long, position long, and looking towards a reversal, right? So we have sell side liquidity from this wick low, okay, and we've got the raid, okay, which is here, right? Okay, so if we just pop a tick, and as you can see, that actually took us into the discount of the breakaway gap. Okay, so the lower half, right? And as you can see, we had a strong bounce up and we closed obviously outside of the breakaway gap, and we still trade above the breakaway gap now. Okay, so if this is our current buy program, okay, and we can make this green. Let's bring the text to the bottom. And of course, when I'm doing a lot of this charting, I highly recommend for you to go and chart this all out yourself too, right? So now, what we're interested in particular is is first off this candle range, okay, this weekly candle range. So a bit of candle range theory. So we're interested in this candle range here. Let's get rid of the breakaway gap so it's a little bit clearer, and the old sell side liquidity sweep. And as you can see from this down close candle, right, you can see that we had the sweep, the raid on the candle range low. We had the close back above, so that was an indication of a buy program and a potential reversal. We then had the close above the equilibrium, which is, okay, that's the close above from this up close candle above the equilibrium. So at the moment, the ball is in the bull's court as from the perspective of candle range theory, and it looks like we're actually targeting this candle range high over here. Okay, and then if we can look for further confluences just simply from the weekly time frame, and this weekly candle. Okay, so let's keep that there for the moment, and let's frame our previous week range, which is here. Okay, so this is our previous week high and previous week low. Let's add the 50% equilibrium. All right, and what you can actually see in this case, we had the raid on the previous week high, which is here. Okay, so the previous week high in this case was our key draw on liquidity. We got the raid, right? And you can see we're actually trading below the previous week high at the moment. Okay, now typically a good area of support in a sense would be the equilibrium. Ultimately, by the weekly close this week, we still want to close above the equilibrium, right? If we do close above the equilibrium, but below the previous week high, then it's very likely we're just going to consolidate further, okay? And it'd be a case of this bottoming structure taking a little bit more time to play out, right? Which is what I expect at the moment. Now, if we close below the equilibrium, right, then we actually go and target further sell side, right? So if we close below the equilibrium, okay, so below 80,220, 80,200, then it's likely that we're going to possibly invalidate this buy program and target the previous week low, okay? If we get the close above previous week high, right, so if our weekly candle this week closes above the previous week high, which I think is less probable, then it's a good indication of we're actually going to target the candle range high, which is over here. Okay, right, so if we close above previous week high, we then go to target this candle range high as our drawn liquidity. Okay, so that's my thought process at the moment from a weekly time frame. We do actually, if I get rid of, let's get rid of, yeah, and let's move to the monthly time frame. Okay, so you can actually see from the monthly that we have, it's looking a little bit more positive. Okay, that's the main thing at the moment, because we're soon closing in on the monthly close. All right, and we have got a similar kind of scenario where we have swept sell side, significant sell side, our key drawn liquidity, which is the previous month low. Okay, so you can see we've swept the previous month low, and we're actually still trading towards the equilibrium in this case. So what I'd like to see is a weekly close above the equilibrium, right, which puts us around 86k. I'd like to close above the equilibrium, so then we target again further buy side liquidity, our key draw on liquidity levels, which would be in this case previous month high. All right, if we close below equilibrium, then it's likely after sweeping previous month low that we're just going to consolidate further, okay, and potentially consolidate between 86,000 and 76,000. We likely won't come that low again, but that's what I'm looking at the moment. And you can actually see that we have, again, this is our monthly breakaway gap, okay? And you can actually see we have fulfilled this too, okay? So there's a lot of confluences at the moment from a monthly time frame and a weekly time frame that we have actually traded within our key point of interest, being a breakaway gap, our key PD array, premium discount array. And I mean, you can see in this case how we are the candle bodies, okay, candle body closure at the consequent encroachment, and we're still trading above the consequent encroachment, in this case at the breakaway gap. I have a bullish bias. There's a lot of confluence here at the moment from monthly and the weekly time frame to give me the confidence to be spot long and to be not necessarily looking for longs on an intraday time frame, because I am still looking for shorts. But as I said, from a spot long perspective, I think this is where you kind of want to be averaging in to Bitcoin into altcoins before we begin to target higher, right? Okay, so what else did I want to cover? I wanted to cover okay, so we know that we're trading within the weekly breakaway gap. Okay, well, we've traded already in the weekly breakaway gap, and there's another potential reversal pattern right here, right? Which is 1, 2, 3 drives. Okay, so a 3 drives pattern, right? That's typically a bullish reversal pattern. You can see with each drive lower, we have traded into our breakaway gap, and each time we've actually taken sell side liquidity. Okay, so being this wick low, again this wick low over here, again this wick low, right? And you can see we've got another wick low here from daily time frame. Each time we've actually taken significant sell side liquidity and gave us a bounce, right? So I'm a lot more confident in this buy program as opposed to the last buy program, because we've fulfilled this breakaway gap as I'd like to see. Same with the monthly breakaway gap, and we've got a potential bullish reversal pattern that's forming at the moment, right? But as I said, this could be a bottoming structure that might take some time to actually form. So if we take a look back at 2021 in this case, again, very similar situation. This was something that took weeks and weeks to form. Okay, so this was from mid-May till mid-July before we then had a displacement and a move higher. And you can actually see similar situation of reversals always begin when there's been an inducement of liquidity and essentially sell side liquidity or sell stops, you can use either terminology, has been taken. Okay, so in this case, this would be sell side liquidity. Okay, and you can see that we've swept sell side liquidity from this down close candle, and this is our candle of interest in this case. So we can, let's take this magnet off, and we can actually, in fact, to really drive home this idea that I think we're playing out a summer-like scenario, is if we go back in time to summer 2021 and we frame this down close candle. Okay, so it's a bit like the down close candle we've got at the moment. This is being our candle range, okay, that we're interested in. And you can see that a very significant level, just like we have at the moment, is the equilibrium, okay? And as you can see, we had multiple weekly closures, weekly candle closures below equilibrium before we eventually decided to then break out, right? And in order to frame a potential reversal, what we want to see is the candle range low being swept, which is this low, which we got, and sell side liquidity, okay, which again would be this low, right? And that's ultimately what we got. So if we now take more confluence for why this was a good reversal to trade into, a good early sign of reversal, this structure here, right, which is again a bit like what we've got at the moment, is you can actually see that this would have been our previous week range. Okay, this would have been our previous week range, and we in fact closed above the previous week range, closed above the previous week high. So that's a breakout from the previous week range, and that is a good indication of this being a reversal, and we're going to potentially see continuation and a reclaim of equilibrium. Okay, and if we fast forward a little bit further, okay, you can see this up close candle. Okay, continuing to fast forward, we got the close above equilibrium, right? Okay, you can see we then traded back to the equilibrium. So now what we're looking for, we are looking for a close above this high, okay, in order to see further continuation to this candle range high. Okay, and as you can see, we had a little bit of a pullback, right? Had a bit of a pullback to the equilibrium for support as a key level, okay, of this candle range. But then ultimately, this is our drawn liquidity now, okay? This is our major drawn liquidity. And as you can see, we had the close above the previous of this candle, this weekly up close candle. And as you can see, it's a bit like a ladder, okay? This is continuation, this is expansion. This is identifying an early sign of reversal, and this is trading the expansion and the momentum to our drawn liquidity, okay? So if we continue, you can see that we sweep the candle range high, okay? And you can see the following candle, as we've taken this candle range high, is starting to pull back a little bit. And interestingly enough, we do have a weekly bearish fair value gap, or in other words, a sell side imbalance, buy side inefficiency. From a weekly time frame, this being now a key market imbalance, a key inefficiency that we want to see price trade within, and then either see continuation or some sort of reaction before a continuation higher. And you can see this right now, okay? So we had a bit of a pullback, but we want to see again a close above this, okay, this high here, right? Similar situation. We wanted to close above this high and this high, which we got, okay? As you can see, we got there, we got the close above high of this high, got the close here, and we got the close above this high, which is here. Now we're trading at the consequent encroachment of the SIBI, okay? So I'm expecting some sort of reaction, okay, which we're getting a reaction now. And you can see that we've actually got a candle body closure from a down close weekly candle that gave us the reaction that we expected from the consequent encroachment. Okay, and we can actually let's add the text, shall we? Consequent encroachment. So as I said, just watch this video, draw it out on your own chart because it will help out, and then you can refer back to, this is a bit of back testing, and you can refer back to this chart whenever you need to, as opposed to watching a video, okay? And you can see we're getting that reaction now. So I'm expecting a pullback And then you just look for a key level for a pullback. You could potentially look at this BISI. Okay, this inefficiency here, but that's probably too deep. But we're likely going to trade back within this down close candle and this range, which we do end up, I believe, doing. Okay, so you can see we actually had a full fill on the SIBI, and now it's given us the reaction, a really strong reaction. But when we typically have a fill of a market inefficiency, a market imbalance, such as a bearish fair value gap or bullish fair value gap, and we see price trade and fill the entire inefficiency, then it's usually an indication and a sign of that the bears haven't got momentum. Okay, typically, if there was true bearish momentum, you'd want to see a rejection from simply a tap into the SIBI and then reject, or you'd want to see rejection from the consequent encroachment being the 50% level. You would not want to see a full fill of the SIBI. Okay, so this would be an indication of we're going to get some sort of pullback before continuing higher. And as you can see, we got the pullback, continuing to get the pullback, right? And then we begin to trend higher at that point, right? So ultimately, we then go to target, of course, this high over here being the all-time high at this back in 2021. And this is what I'm thinking where we are actually at the minute. Very similar price action as to what we had in 2021, where we then should go on to target this all-time high at 110,000, right? And we likely print that all-time high in the Q4 this year or potentially Q1 next year. As I've mentioned in videos before and a lot of streams in the collective or even on Twitter, I have always been targeting Q4 this year or Q1 next year is the true cycle all-time high in Bitcoin, right? So I think this is where we're heading at the moment. There's not really much else to cover, to be honest. I think we're waiting for a bottoming structure, which we are obviously forming. We've got a 3 drives bullish reversal pattern. We've got early signs of a bullish reversal, as I've shown from the weekly and the monthly candle structure. And yeah, I think that's pretty much it. So have a good day and have a good rest of your week. Cheers.